What was that? Ain't nobody that bears me. All right, let's make sure we get everything good before we get that show started today. Let me make sure everything's working properly. What's up? Yeah. Can't help you with that one. Let's see. Are we good? Are we good to go? Hope y'all all been blessed. Having a phenomenal weekend. As you can see, I pulled up with my glasses today. Let's just say it was a good weekend. I'm just paying for the consequences right now. You guys can just hang out with me while I get situated. Supposedly it wasn't. Yeah, I don't know what she was talking about. But I think we're good. Like I said, hope you all been blessed, having a great weekend. Today's been actually a pretty phenomenal day in terms of just what's going on in the world. If you guys did not, I guess what they call it today was the not. Oh my gosh, the Liberation Day. Yeah, so Liberation Day where President Trump talked about all the the tariffs and all that shenanigans. So tariffs was the talk of the world since I would say literally the beginning of the year is I think still going to be the talk of the world just because there are some things that are big question marks. But today was the big day of discussing of how it's all going to be rolled out. So today's it's a good time to be aware of what's going on in the world in real estate. As you guys know, we do this every single Wednesday. So pull up on me. That's actually a good it's actually a good like way to start this, right? I have my own saying. Like pull up on me. But yeah, we do this every Wednesday where we're gonna go ahead and discuss what's going on in the world of real estate specifically. We're not gonna really talk about everything and anything. All right, we're gonna stay to what I know best, which it is real estate. That's where my focus really is at on a regular basis. So tune in, share, tell all your friends who is looking to buy, thinking about buying, about to buy, under contract, right? All these other individuals that I'm always looking to help because right now the world is in a very very spooky place right now when it comes to navigating the world of real estate, right? Affordability is off the charts. We have interest rates off the charts, right? All these things are unfavorable for the average person. So my goal is to make sure to give you guys all that information so that you know exactly how to navigate it and we can accomplish your goals together. But enough of me ranting and talking. Let's go ahead and talk about exactly what it is I wanted to show you and start off because I don't know how many people saw this already, but this was like I saw this way too many times on my feed. I was confused as far as why was this being shown so much and why are people paying so much mind to it. But of course, it's talked about. Actually, we can go to the caption in itself and maybe you'll understand. This is a screenshot, but it's pretty much saying 6.1 million Americans are behind on their mortgage. However, of course, everyone sees that and says, "Oh my gosh, crash real estate, woo!" Not always going to be the case, right? So if we actually look at this, and shout outs to Logan Mashami, I probably butcher his last name. He actually broke this down, and we can go ahead and check out. Actually, go on his Instagram and go check out his breakdown, specifically talking about it. But real quick, if you look really closely, this is actually the thumbnail too that I have. If you look really closely right here, I don't know if you could see that, right? I'll go in as close as I can. It says Freddie Mac's serious delinquency rates multifamily. So when you think about that immediately, what do you think? I'm curious, right? Let me know in the comments. What do you think? When you hear multifamily, what's the first thing that comes to your mind? Let me know in the comments so that I could see where your head is at. Because if you think this is geared towards literally your average Joe mom pop homeowner, then I mean, how many mom pops do you know own a multifamily? A multifamily is anything that is greater than, you can say greater than two, right? So anything that's two plus units in a property, right? But in my eyes, if we're really talking about multifamily, we're talking about your bigger apartment complexes. So that's how I take multifamily. Yes, I'm sure that's probably the mom and pop, they own multifamilies, which is probably duplexes, tri, or even quadplexes. But when we look at this, I really think, oh man, this is probably geared towards more apartments, right? Apartment complexes, which is what we've seen more and more and more than ever. So, what is there to really do on that part, right? So again, looking at this, I hope you have a different mindset on it, right? Which is, okay, if Freddie Mac's serious delinquency rates for multifamily, it's not really towards the average homeowner. It's more or less geared towards your investor. Maybe you're a corporate investor. The people that have the syndication groups, right? We're talking about all these individuals that have deep, deep pockets. We're not talking about the average mom and pop. Unfortunately, right? I know a lot of people wanted to hear that this is what it's referring to, but I'm here to break down the truth and give you everything that I at least come across to kind of clear up, at least for those that are watching, right? And those that actually care and want to kind of guide themselves for what may come. Because again, right now, I don't think we're in that 2008 market. I'm not a expert, nor am I, uh, what's it called? A future teller, right? So I can't necessarily tell you what exactly is going to occur. Am I preparing myself? Yeah, and you'll hear that I'm preparing myself more and more as we go through this market, right? But this chart right here, please, if you see it, don't freak out. It's not related towards your average individual who is buying a single family home. It's not. I'm pretty sure you're pissed off now that I said it. And if I pissed anybody off, let me know in the comments, because this is what we do here, right? We give you the real information, the real game. Like I mentioned, you can go to Logan's page here on his Instagram, in fact, and he actually breaks it down. He talks about this. And this is my guy when it comes to real estate information. It's like real estate data. I need some understanding. I'm giving you the game right now. Go tap in with him, because then he'll help you tremendously understand what's going on in the world, right? So it's not just so much of, hey, what's Ronnie saying, right? Most of the times I don't understand it, so I'm trying to get better understanding to provide you some sort of value. But Logan does a heck of a job. We got Harry in the chat. What's going on, man? Hope you're having a blessed day. He says, hi, Ron. Thanks for your chat. My girlfriend now has a brownstone in Brooklyn. She's looking to relocate here to, I'm assuming that's Raleigh. I don't know if that cut off on me, but if she's looking to relocate here, man, you know how to reach out to me. You can either do one or two things. You can email me, which you'll find my email somewhere on this YouTube channel, or you can just go out to my website. I actually take you there right now, right? So she has a brownstone in Brooklyn, man. She's living good. I hope you have real good plans for that. Because yeah, we'll talk offline if if you guys need any assistance. But if you are looking to relocate to the Raleigh area or North Carolina, or honestly anywhere in general, go to my website and you can find this all in the description below. You click this let's chat, complete this entire form. That way I can get a better sense of what's going on and how to better assist you. Once you do that, I'll be in touch and we'll take the conversation in there, right? So I try to make it as easy as possible for you all to get in touch with me. If you didn't know this and you're just finding this out now, there you go. But yes, like I mentioned, Logan does a phenomenal job with breaking this down. So I actually want to share with you another beautiful picture, because this is going to go right in alignment with what you see here, right? Or at least what you did see on that screen in itself. Just give me 1 second to pull it up. I thought I had it here already. So this is the chart that should have been shown. So again, Logan, right? I'm telling you, the guy knows what he's looking for. The guy knows how to find the information. He knows how to share it. He knows how to explain it. This is the person that you're going to want to pay a little bit more time to if you really want to know, right? If we're really in that '08 doom or a real estate bubble crash, yada, yada, yada scenario, right? So if we look previously to that chart, if you go, maybe you can do it. I don't know if it's DVR set up or anything, but if you go back and look at that chart, you could see how it said 6.1 million people are delinquent, right? But it was talking about multifamily. Here, this is more geared towards, of course, those mom and pop, right? The people that buy homes or sell homes for their primary residence, not investment properties, primary residence. And so if we look, you can see how many people are actually delinquent, right? And of course, this is that 2020 time frame, right? And everything has been going down since. And that black line you see here, that's for FHA. So FHA being at 4.41%. We have this gray line here, which is at 2.58%. And then the Freddie and Fannie are really low, right? That's your conventional essentially. Is the best way to look at it. So you tell me. Let me know in the chat. D- do you see the difference? I mean, in fact, you can see in the title it says serious delinquency rates among single family loans, right? That's where the majority of the world that is purchasing a home, right? That's that if you're really waiting for the doom and gloom time, which you're waiting for everybody to start giving you crazy discounts like it's 2008 all over again, right? That's the single family home aspect. I mean, I'd be very shocked to. I don't know many people who say I want to buy a duplex first, unless if they already are thinking investor friendly or investor mindset, where they're like, hey, they're just gonna run out the other, and so on and so forth, and you know how that goes. But this is kind of where we're at. I hope I didn't burst anybody's bubble because we're going to talk about essentially, are we in that phase? Are we in that time where we need to be concerned about, just real estate? Is it like the 2008? And of course, I think I'll go back and always say, I definitely think it depends on where you are located and where you're looking, because that's going to play a huge factor into what that real estate market looks like, right? And I'll break it down because this article does a phenomenal job of doing that, and I'll show you a real life example of what's going on for those people that are in Florida or maybe looking in Florida. And, a hint of what market we're going to be talking about. But let's go. As you guys can see, title says it very clear. I think this is all. You're going to see a lot of doom and gloom. Unfortunately, you're going to see it. That's because that's what gets the clicks, and I'm sure that's why a lot of you guys all clicked it. You're like, "Oh my gosh, 2008 bubble, click." But I'm not going to share it, and I don't hope you read the title real clear because it says housing market looks a lot not like 2008, right? I'm pretty sure a lot of you probably brushed over and it's like housing market looks like 2008. Oh my gosh, what's going on now? So again, I disagree with a lot of what and a lot of what individuals are saying now, because I think it all is going to be in retrospect to where you're located. But if we go ahead and take a look first here, right? So this is, I think, what set off this entire article is Nick Jurley, which he has a YouTube channel. I think I forget what it is called. I think it pops up later in this latest article, but he actually said it's beginning to look a lot like 2008. And then he kind of mentions something that doesn't get really said in the headline, which is right here, right? So it's beginning to look a lot like 2008, but for home builders, right? So again, there are so many different aspects of real estate that we can look at, right? We can look at the regular person who's purchasing a home for themselves, single family. We can look at the investor who's purchasing to, just reap the benefits and play the capitalism game. We can look at home builders who are providing inventory for everybody in the world that's looking to purchase a home. What other aspect can we look at? Foreclosures. We can look at, there's so many different aspects of real estate. So again, when you see these headlines, read it clearly or bring your questions here and let me know what questions that you have about something that you that you came across to better assist and help you. But yes, it's looking a lot like 2008 based off of it's looking a lot like 2008 just for the home builders. And I'm only going to read this article because I was not playing the game of real estate. In fact, I don't think I was even of age to play the game of real estate back in 2008. So I honestly, I know just off of stories that I've seen, heard, people explain to me, that I've researched myself, of what exactly occurred in 2008. And I do know that, yes, it was a big show, right? I want to say the S show, but I want to keep it PG for anybody that's listening around kiddos right now. So shout outs to all of you guys. But right, so like I said, real estate works really specific to your area. So in parts of the country that have been building the most homes in recent years, right? If you guys don't know, that's Texas and Florida. They've been going on a rampage. In fact, Texas, I want to say it was that Austin area that they were building insane. Like they were doing a lot in that early 2020 phase. And again, going back to home builders, right? Home builders are struggling to offload their properties to cautious buyers bidding their time for lower rates, right? Lower mortgage rates specifically. So as you can see, those are two markets. And I'm sure there's other markets as well that we can go ahead and talk about not necessarily, I mean, being in that, building, overbuilding, essentially. That's essentially what this is occurring. I will say the Northeast, no, we can write them all off entirely because they didn't really build at all. I wish I had a picture that I can really show you to show you where did the building really occur. I'll try to find something in the meantime because I think I have something that could show you where a lot of people are building. But if I don't, just know it's not the Northeast at this current moment, at least. Let me see. I don't think I do. That would have been a dope one to show you guys. Um, unfortunately, I don't think I do. Yeah, but at least it's not Northeast. I don't think it's California either. I think California had a little bit, but they didn't have a lot. I'll tell you that for sure. But you can go my word, or you can research me and fact check me. Please do. I encourage that. In fact, because I am not a genius, right? I love to learn this stuff with you guys and provide that information as you guys all going through the journey of trying to purchase a home with me, right? So one thing you'll find is many home builders are increasingly offering incentives to move their inventory. As I've mentioned already to you, you'll find this consistently. I mean, we're seeing it here in the Raleigh market as well. I don't know if every market is seeing it. I know Arizona is, just because I know some people who are real estate agents out there. I know they're seeing it. Right? Are they are they going to be here forever? Probably not, right? It's all going to flow and it's all going to be a give or take situation with these incentives. So if you're in the market now, or again, someone that's in the market, just know builders right now are offering incentives. At least go take a look. You don't even have to move forward with it. Just go entertain them. That's the best thing I could tell you. Just go entertain them because you don't know necessarily what you're going to find. In fact, I actually just, to go on a little tangent right now, maybe a little story time. I just helped a client purchase a home, right? And we literally, before we can even get into the entire community, lo and behold, what do you find it? They're offering a 5.9 interest rate. They're offering closing costs being completely taken care of, right? So if you're a VA buyer at this point in time, you really have nothing to worry about because VA buyers, you don't have any down payment, or even USDA buyers, right? If you have a USDA loan or a VA loan, you have no down payment. So we're talking someone giving you a 5.9 interest rate, where right now, if I go to take a look, interest rates are easily in the six, right? So we're talking 5.9, give or take. You have the best of the best credit, right, in all that scenario. But also, at the same token, they're taking care of your closing costs, right? We have Terrence who popped up in today. He said, and I know Terrence is in the Atlanta market, so let's see what Terrence has to say. He says, builders are willing to do so much more than what they were advertising to. Yeah, literally. I remember even 2, 3 years ago, they weren't even willing to compensate, people who had buyer's agents, which is insane. They're like, yeah, no, we don't have to compensate them because the people are coming to us. But, the buyers wanted the representation. They want to make sure they were getting well taken care of. But builders looked at it a little bit differently. So right now we're playing a different game than everybody likes. So if we go ahead and go right back to this, incentives are being offered. Take advantage of it. I could tell you, somebody else can tell you. Now, if you decide not to, that is completely on you. But I know for one thing, I talked about Nick Jurley and his post, right? And I think this was sparked this entire article, right? It's beginning to look a lot like 2008, yada yada yada, for home builders at least, right? And I think this right here set it all off. So I took a little deeper dive and I was like, let me go ahead and check out exactly what's going on in this area, just to kind of give you guys some sort of information. And so, if you're curious, I believe this is the Tampa area, if I'm not mistaken. Just wait for that to load, and you guys can literally see why he mentioned. I guess this is looking a lot like 2008 because I mean they do have a ton of inventory. I mean, this person is probably trying to sell, which they're gonna have a rough time trying to sell. Let's actually go ahead and check it out. Yeah, unfortunately, that's gonna suck. They probably won't get out of there because again, well, not only are you trying to sell, but you have all of this competition that you have to compete with. So, I mean, it's gonna be a grand day for them. Maybe they got another person over here. Oh no, that one sold already. But yeah, so that's what I guess sparked this post. He took a trip to this area and found out this. And I'll even take it a step further because although this looks good, right, looks good for the buyer. It's definitely not good for the seller. All right, so this is essentially what he saw in real time, which is good information, right? Because it lets you know what's going on at least in that Florida market. But I'll take it back to this article here. Right, so that was in LGI Homes. As you guys can see, they had, at least what this article said, they had over 20 spec homes that were completed for sale. And the crazy part is, I think, is they're advertising 0% down mortgages, which you're probably thinking, well, how in the heck are they even doing that? Most of these big builders nowadays, they have their own financing in place. So everything is in-house for them at this point in time. So they're offering that to help get to move all this inventory and so on and so forth. So again, there's deals and there's things that are being put out there. These builders are getting creative as heck. And of course it could be because there's way too much inventory. In fact, I actually learned some builders, they operate where they won't even build until they have some sort of until they have a sold, right? A sold home or somebody on a contract. They won't build until they get some of this inventory off that market. So if we go and take a look right back here, they're offering all these sort of different incentives because they need to continue to build. And sitting on land is not going to make you any money. And, if you guys don't know, builders are in the business of profit. They're there to make money. So the more that they build, the more that they make. If that's not something that's news to you. But just what this article says here. What's interesting is that the builder agent, which is insane if the builder agent actually told this guy this, they're starting to convert these homes into for rent. So not only do we have another issue. So yes, there is incentives. Now no one wants to really buy. At least buyers don't want to buy. Now they're going to convert these homes to rent. Right. So now they're going to be like, you know what? Forget it. No one wants to buy. We'll just rent these out and we'll still make sure we're going to make money. So I just want you guys to see that there's always a solution in something, right? And as you guys can see, these builders are going to say, you know what, no one wants to buy it, so we'll just go ahead and rent it out and see what they can get from that aspect. Because then, of course, it's an affordability thing. And if they can keep their price points at a level where it's affordable for the renter, then hey, they'll be on top essentially at the end of the day. Which it's insane to see that that's the solution, right? Instead of, I mean, what other solutions do you guys have? I'm curious because at this point in time, if people cannot afford it or people don't want to afford it, then what is the real solution? I'm curious. Let me know in the comments if you have some sort of solution other than right tanking the market, because we know that that's one of the things that's probably going to help. But As you mentioned here, I'm guessing that it's because they want to start on the next phase of construction and they simply can't do that with 20 plus for sale homes, which is it's pretty crazy. I do see that, converting these homes into for rent, it's personally speaking, it's not good because I don't know if you guys remember that whole "you will own nothing but be happy" aspect, or that saying that was like early in 2020. I feel like this is exactly where it's leading towards, right? Not only are people, not trying to jump into the market, but it's more or less I'm saying that because if you don't own your home, then when will you ever? Right? I think that's exactly what led us into this scenario here is builders weren't building enough back after really 2008. Now that they're building, no one wants it. And more people are like, what, can't, whatever the scenario is, right? Of everyone. But if we're seeing more rent to own by corporations, I just see a lot of damage being done to the demand side of things, where people will then, at some point in time, sorry to be so doom and gloom right now, but I truly indeed think that if this continues, I don't know if people will ever really have a chance at home ownership, and that's just me thinking and seeing what's really going on and how everything is occurring, but hopefully I'm wrong, right? I truly indeed hoping that I am wrong because I advocate for home ownership. In fact, if you guys don't know, most people make their wealth in being a homeowner rather than a renter. I'm pretty sure I showed it here once on this stream where I'm trying to find the chart if I even have it. Where if you're a homeowner, you're more than likely that's where most of your wealth is. I probably showed it here someday, but that I don't know where it's at. But you gotta take my word for that one. That one, I know I'm not BSing you on that. But how is this similar to 2008? And that was the freaking best question that I had as well. It's like, well, okay, good. Builders have inventory, whatever, but that has nothing to do with at least the homeowners who have a ton of equity. I mean, when I say a ton of equity and they have good interest rates, how does that even correlate to 2008, right? Just take a look at this. You guys haven't seen this one before, right? This is how many people take a screenshot of this. If you're ever in a disagreement with someone, they're like, we're gonna crash because everyone can't afford their mortgage, whatever the case may be. One, I could show them the chart that we talked about earlier, or just send them this stream and just shut them up. But you can also see how many people have mortgage rates that are below, let's go 80%, right? That's the threshold a lot of people want to use, below 5, right? So it is about, let's go to right now. No, so a lot of people, yep, below 5. Just about, I would say about 75. I know it's like closer to 80 or whatever the exact stat, but this chart doesn't really show, so I'm not going to speak on something that isn't being shown. But there, I mean, this is what's going to hold a lot of people still. I mean, people have equity. Let's just put it like that. People are good. But anyways, how does this correlate to 2008? The best question in the world, right? So in the lead up of 2007, and honestly, Terrence, you were around during this time, weren't you? So you could even chime in on this as well. In terms of what exactly was going on in 2008 and how does this all even correlate if you're still here, honestly. But okay, back in 2007, the housing bubble then actually highlight the 2007 housing bubble then burst into a crisis. Home builders were so desperate to offload their properties that they offered big incentives to potential buyers. Right. So that's what right now what we're seeing. Is it similar? Yeah, right. I mean, we're seeing incentives because people are not trying to purchase, but we saw this even in 2002, right? When 2002, I would say 2002, 2003, where people started to slow down in terms of how much they were buying. Terrence said that he got in real estate in 2009. Oh, just after. It was taking 12 months back then. It was taking 12 months for homes to sell sometimes. So are we there yet? Based off of what Terrence said, I'm gonna go on a limb and say I don't think we're there just quite yet. I don't think homes are taking that long. In fact, some homes I know are still going under contract relatively quickly. Again, had a client of mine who just purchased a home with me. And then his home is selling in the Northeast. And I think if I'm not mistaken, it was coming home. It was coming soon. The phase was coming soon for about. Don't quote me on this because I wasn't on that side of the transaction, but I want to say it was coming soon for about 3 to 4 days, and they put it live on Friday. And if I'm not mistaken, by the end of before the end of the weekend, they already had several contracts. They had to put a deadline in place just because they had that much traction, right? So can we say that, is it anything like 2008? Sure, you can say it if you're not in the Northeast, but other than that, I don't know what to tell you. But yes, so the saying he's saying, right? So this is why I like to break down these articles because again, you'll see so much going on, and it's like what is true, what is not true, what's actually really going on. But again, the same thing is happening now with large builders, but again, asterisks in specific areas, right? Reporting their biggest use of incentives in over a decade. According to John Burns, research and consulting builder Lennar was offering 13% of revenue in sale incentives on the home deliveries in the quarter leading up to, oh wow, that's a lot. Okay, so while the situation remains drearily of the 2008 crisis, builders now seem intent to continue to build, right? They're not going to slow down because they know if they slow down, we're only going to be in a bigger issue, unlike the years leading up to the housing crash, he said. So if they slow down, that's not good. If they speed it up, that's still not good. So what in the heck do you really, really do? If you're ready, if you're in the market and you're ready, just go look. Just honestly entertain it for the least. There was okay. But like I think I kind of mentioned this throughout the entire stream, right? I don't think this is a problem for the entire country just quite yet. I mean, I just gave you a good scenario of a client of mine getting his home under contract within over a weekend of purchasing his home or of selling his home. But here you'll see, I personally would say it's a Florida problem, it's a Texas problem for now. Maybe it can spread, and that's probably spread like wildfire at some point in time. Now I think that's when we have a bigger problem. But right now, I think depends on where you're looking. In fact, if you're watching now, let me know what market you're looking in, and we could determine, right? Maybe we can determine, right? We can do it based off of the information I have that's to show you where inventory is, and we could determine that if that market specifically is going through a mild recession, I guess we can probably call it, because it's not like 2008, in my opinion, just quite yet. But I think this is where we can talk about, as you guys can see what's next. And this is where I kind of like, I'll turn it back on to me because this is where I really want to discuss what would the market look like if it actually were in a housing market. Give me 1 second. I'm starting to get used to this thing. So I have a stream deck. Yeah, I actually just got one. Shout outs to my girlfriend for getting it for me. So we'll see. As you guys can see, we're starting to vamp up this thing. The production of this thing is gonna get a little bit better as we produce and get a feel of what's going on here on a regular basis. But Terrence says, look at the rate of foreclosures and defaults, not even comparable. Exactly. Yeah. It's one of those things where it's just there's not much you can do. I mean, that's just what it is for now, right? Hopefully, I mean, I shouldn't say hopefully it stays like that because if it doesn't stay like that, then that means it's bad for the entire world. But what would a recession do to the entire housing market? I'm curious. If you haven't been through 2008, then what exactly do you think is going to occur? And let me know in the comments. Because one thing for certain is there will be a decrease in demand, meaning there's going to be a lot less buyers out there looking to shop. Kind of what we're experiencing right now, right? A lot less people, and we can even say a lot less people simply because one, those individuals have to, those buyers have to hope that they still have their job, right? So this might be a good time to build strong relationships with your managers or the people that have the potential of letting you go, right? Build those relationships, make yourself a little bit more valuable, especially if we're going into those territories or you believe that we're going into those territories. You might want to make sure you're secure, because if there is a decrease in demand, then slower home sales, right? Homes are not going to be selling, as Terrence even mentioned earlier. Back in that time of 2008, homes were taking 12 months plus, or 12 months. Yeah, 12 months is what he mentioned to sell, right? Only sometimes, right? Not every scenario is like that. But also, if we are going into or experiencing some sort of recession, there will be lower rates. The thing is this, right? If there is lower rates, can you take advantage of it? Again, going back to what I mentioned, if you do not have any sort of income, no, you're good luck getting a pre-approval, right? Good luck going to a bank and saying, "Hey, I want to buy a house." They're gonna look at you like, "Okay, well, how much do you make?" And you're like, "Oh, I don't have a job." They're gonna be like, "Okay, well, I'm sorry, can't do nothing." Right? So even if we do experience lower rates, lowers mortgage rates specifically, can you take advantage of it? All right, go build those relationships. I'm forewarning you, right? Everybody wants it, so you better make sure you're keeping. You better make sure you're secure. I actually just saw a post of someone I went to college with, and I was like, oh man, another one lost their job, and I was like, geez, it's happening more. At least this was someone who did work for the federal government, so that Elon effect came through on that part. But in addition to what would occur if a if a recession were to occur for the housing market, declining home prices, right? So these are all things that sound really good, but again, you have to be in position to buy, because in those times, right? Let me ask you this, right? And this happens to me too, so I understand it. This is why I'm going to share it with you. When the stock market is going down, what are you more inclined to do? I know some people who are like really like, I'm buy, 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 buy. But sometimes it's, not all the time am I even like that, right? Sometimes I look at it, I'm like, do I really want to buy now? Because you don't know, right? Can it go any lower? Right? Is this the perfect time to buy? When is actually the perfect time to buy? Like all these questions and thoughts go through your brain, and you're just trying to navigate it. So consumer confidence is going to go down, right? And that's going to lead to either further drops, or it's just going to lead to you sitting on the sideline and saying, you know what, the time is not right now. And so what happen is sellers will adjust their expectations. And so that is, of course, going to reflect also decline in prices, or even sellers saying, you know what, I'm just not going to sell right now. The market is not there for me. So, and that's going to lead all of what I just mentioned. So if I go through it again, right? So decrease in demand, right? Slower home prices, slower home sales, lower mortgage rates, declining home prices, consumer confidence is down. So if you don't want to be on that spectrum of consumer confidence going down, make sure you build yourself up right now to get ready for that, because other than that, there's nothing that anybody can do. But also sellers readjusting their expectations. And as we know now, sellers have really good interest rates, so, and equity. So, are they going to be forced? It all depends. It all depends on their specific scenario. So Terrence mentioned people sell the lows and buy the highs. Yeah, literally. I mean, that's ideally what you would want. Well, no, that's not. I read that this people sell the lows and buy the highs. Yeah, exactly. They chase the green candles. Unfortunately, right? It's a psychology thing, though. It's not even like, you just don't know when to do these certain things, because no one can tell you the future. Like if I were to sit here right now and tell you, yeah, we're in a recession. Yeah, we look just like 2008. Oh my gosh, recession. Like who am I to even say that? I don't know. I don't know what the heck tomorrow is going to look like. So I'm only here just to feed you that information, and hopefully at some point in time this information is valuable enough for you so you can start to apply some of these things and prepare yourself. Again, don't go build those relationships. I'm going to keep saying that, because I think that is one of the things that can save a lot of individuals from, being in a position where they no longer have employment. So I'm curious though, is it cheaper for those individuals, maybe thinking, well, okay, is it cheaper to buy a home in a recession? As home prices start to decline, right? You may feel like, yeah, obviously, right? So as I mentioned, the decline in home prices, lower mortgage rates, buyers now have negotiating power, kind of what you have right now. Right. But you also have reduced competition. So kind of all of that stems right now is just not at the prices that I think a lot of people like. Terrence, he says the best advice ever, whether it's for stock or real estate, it's not about timing the market, but time in the market. Yeah. Just look at everyone that purchased in 2020. I mean, They are living the dream right now. Well, I shouldn't say the dream. They're living some people's dreams, right? Which being in a home with a good interest rate, being in a home with some equity, I mean, that right there is, in my personal opinion, I would say the American dream, right? You have your home, you have a good interest rate, you have affordable interest rate, affordable home. Hopefully, them taxes didn't kick you out your home, or get you make do a wake up call. I know a lot of people right now are experiencing that. In fact, I have a tip on that. Towards the our Q&A session, I have a tip on what you can do. I actually learned something myself this past weekend on what you can do. It's only in certain counties, which sucks, but here, I'll share this with you because I have a nice, pretty picture, right? So, if you wanted to know, again, if it's cheaper to buy in a market, why is this thing not working right now? There we go. So if it's cheaper to buy in a recession, you might want to know where you could possibly look, right? So this is for 2025. This is actually my writing, right? This is has nothing to do with this. Here's the top states with the lowest mortgage payments. So this also could help you. Probably not where you want to move to, but at least you have an idea of where you could possibly look if you are looking for the lowest mortgage rates. Now imagine buying in one of these areas and we're in a recession. Oh, good almighty. Whew. I mean, I spoke to someone today, and she was like, "Yeah, I forgot when she said she. I don't think I even asked her when she bought her home, but she was like, she's in Georgia. It's a different area. She mentioned it was a culture shock for her, and she said her payment is actually. You take a guess. I'm just gonna allow you to sit on that while you look at this chart for a little bit, because when she said it, I was like, what in the heck? And mind you, she's on an acre. She said just under an acre of land. That home has 5 fireplaces, which I was like, "Why do you need so many fireplaces?" I didn't ask her how many bedrooms, I probably should have, but I mean, with 5 fireplaces, you have to have at least 4 bedrooms because that's a lot of fireplaces anyways, but her payment was $900, and I was like, "What in the world?" I mean, you just don't hear things like that anymore at all. Granted, it wasn't like in any metro city, so, we kinda gotta let that one slide. However, let's go to the million-dollar question. Is the recession on the way? This is not my words. This is this article's words. And if you really want, I'll share this in the because we're not gonna go through this entirely. Like I'd be foolish to do that to you guys. If you want to go ahead and take a look at it, take a gander and read through it, you are free to do so. I just dropped it in the comments because what I really want to do is just share with you these pictures. And the reason why I want to share with you these pictures is because it's really not so much of, and that's the thing. Let me do this. This is really what the CFOs are saying, right? So this is a survey done, and we're gonna take a look to see what the CFOs are saying. Not necessarily me, right? We're gonna look at what the guys that are managing and controlling a lot of the money that we give them on a daily basis. Starting with this one. Once it loads, it was going good just a week ago. There we go. So looking at this one, you can see where do the CFOs, right? And this is a survey, right? So this is all going to be he say she say essentially, and this is where they're saying this is probably more geared towards the stock market at this one specifically, but you'll get a better understanding and sense of where other CFOs are at least thinking of the future of where the world is going, where the economy is going, right? I always like to say though, the stock market is not a reflection of the economy, so don't make that mistake. I used to do it a long time ago till I got corrected myself because those are two different things. But how do all of them feel about the state of the economy, right? Somewhat pessimistic. You have 75% of them that said it, right? Which I'm curious to know after today. How do they all feel about it? Not hearing what President Trump had to say about those tariffs and just seeing the reaction on the stock market, not a lot of people seem like they liked what he did, but somewhat optimistic was 15%. Very optimistic was 10%. Excuse me, of how they felt about the U.S. economy. Mm. And then this, and the reason why I'm going over this is because I don't want to read that entire article. Please do that at your own leisure because it is an extremely long article. Where so when, if ever, do you expect the U.S. economy to experience a recession? So, as I mentioned, the $1 million question that everyone always wants to know, right? When is a recession going to be here? A lot of them are saying the second half of 2025, which we're talking June, which is actually the busiest time in real estate. That's when 60% of them are saying. So June and I don't know onwards, I'm assuming, or however long, but let's just say for that to occur, it's probably going to be in that June. And then 60% of them said that. 15% said 2026, 25%, which I would go here too. Add me to this one. The not sure aspect is 25% of people said that. I would say that every single time just because I don't know. Like, I just look at these things. It's just like, what metrics are you guys all using? Like, yeah, sure, it's pain, but there's no there's still things that need to happen or occur or for everyone to see in order for that to be like a real life thing. But if the US experiences a recession in the next 2 years, it will be somebody 40% said mild, 50% says moderate. Okay. And 10% said no recession in the next 2 years. So even then, a lot of people are still anticipating everything to kind of be still probably pretty stable. It reminds me, is it going to be like the slight recession that we saw in 2022, right? Where stock market got smacked, real estate got smacked, right? But it wasn't enough so the people enough at least where people made notice of it. Or at least I guess the media didn't make notice of it, I should really say. But on to other things. If you guys did not know, this is just a news drop that I'll share with you. I'm not going to necessarily share it entirely because this is going to help. And then we're going to Q&A real quick just because I want to let you know that Rocket Mortgage is on a buying spree. I don't know what they're up to, but they are doing something. The reason why I say a buying spree is because they actually recently just bought Mr. Cooper, who is actually one of the big, they're the big servicer for mortgages, if I'm not mistaken. Let me actually read this just before I butcher it. Yep, one of the largest mortgage companies in the U.S., responsible for 1 in 6 mortgages. And mind you, Rocket Mortgage have their own stuff going on there. So why are they buying? They just bought Redfin. If you guys don't know that, they just bought Redfin. Now they just bought another mortgage company, which they're already a mortgage company. So why are you going to buy another mortgage company? Who knows? But they're up to something. Yes, sure, we can look at this as like consolidating the industry a bit more. Uh, but I don't know if I like a big conglomerate buying another big conglomerate. I mean, I can almost see this as like the small mom and pop shop, them essentially going after that and taking them out. But there's not much we can do there, right? Some things we just kind of go with the punches and roll. I should say roll with the punches, not go with them. But we're gonna go ahead and go in our Q&A session, and this is a few questions that I did see that popped up on Reddit, and I was like, why not go through this entirely with everyone? Because I'm sure some of you guys all have these same sort of questions. And if you have any questions, as you guys can see, just leave it drop it in the comments. Let me know so we can go ahead and discuss it. But here, we can see there was a question that posed. Well, this wasn't really a question. It's more of a statement. So mortgage increasing from 22 to 3,200 a month purely due to, well, entirely due to escrow, right? So property taxes, this person's property taxes just clearly went up. Everyone be ready for that, especially if you're buying in a new construction development. Just be ready for property taxes to go up, unless if you've already been reassessed. But if you're in a community that is being developed, please just be cautious of that. All right. And the best thing that I could share with you, if you still want to go the new construction route, I know I've been preaching go new construction. The best thing that you can do is check to see if that area has already been reassessed. You can do that to see what are the current property taxes for those properties that are already there that are occupied. Or what you can do is before you sign any sort of documentation and paperwork from the lender, from the builder, anyone, just have them run the numbers for you. What is my monthly mortgage going to look like? And right, and at least you want to make sure that they're accounting for those properties that have already been reassessed. Now, if they haven't been reassessed, man, you have to make up your own number, or at least prepare. I should say make up your own number. You have to prepare yourself for what may come. But something I would add even on to this is, and this is what I've learned recently, is some states, I know in North Carolina, we do offer some sort of exemption. It's not across the entire board. I know you have to either be a disabled, a veteran, you have to be a senior to get some sort of relief. It's not entirely, all right, you're still going to have to pay something. It's not entire relief. Go check that out with your county, right? Check it out with your state. See if, especially if you're experiencing some sort of, or at least if you know someone that's experiencing, or you're scared to experience, your escrow payment going up, right? Just know that the state that you're purchasing in, or even the county that you're purchasing in, go see what sort of tax exemptions do they have for you, because you'll be surprised on what they offer already. I learned in Georgia, certain counties at least, they have where all you have to do is be a homeowner and you can apply for some sort of tax exemptions, and it's not entirely right. It's just some relief, which I was like, wait, all you have to do is buy a home. I mean, I was like, okay, that's different. I mean, that's a blessing for those individuals that are there that can take advantage of it. But I was just jealous. Let's just put it like that. Another thing you can do if you are experiencing some sort of increase, or someone that's experiencing increase, is you can always reassess them, have them appeal the reassessment. But I mean, I say good luck on that one, because property values everywhere went up in the past couple of years. But let's go to this next question, which is, I want to buy a house, but I'm afraid of the unexpected repairs and costs after purchasing. If this is you, I have a few things that you can do. I'm always going to say get inspection. I was actually bickering back and forth with a client of mine who was like, I don't need an inspection. I'm like, all right, you need an inspection. I don't need one. It's a brand new home. I'm good. Oh my goodness. You need one. All right. So we're going back and forth. Hopefully I can get him to just to kind of ease my mind. Um, but if he decides not to, then obviously that's his choice in his home. So can't really do much there. But get an inspection to kind of get an idea of what's going on with that home to begin with. And in fact, that's your last chance to even go back and forth with anyone, right? To get the builder to fix anything. So why not take that opportunity? I mean, we're talking about 500-600 bucks to hopefully save you a couple of thousand, right? But if you don't want to do that, that's fine. Do what you want. You can also get a home warranty, right? If you're going new construction, 9 times out of 10, the builder is going to provide you with one, so you don't have to come out of pocket with that one. But if you're buying a resale home and the seller is not providing that to you, then I would say get a home warranty, right? It may not protect you off of every and anything, but it's going to relieve you from maybe your water heater going out, and talking from personal experience, water heater going out, and next thing you know, you have to drop a couple $100 in comparison to a couple grand that other. Again, I ran quotes, right? So you should always do this. So you should always get multiple quotes. So that's exactly what happened. It's the home warranty said that. I was like, well, that's how much it actually costs to replace. I said, let me see what other people have to say. And sure enough, it was way more. So we by having a home warranty in place, we got a nice little bargain there. And a bargain in the sense where you're paying for it at the end of the day. But the last thing that you can do as well, you can get sellers concessions to prepare you for it. Now, how would you go about that? It all depends on your market, what type of home you're looking for. But if you're really concerned about repairs and just things coming up out of just nowhere, then you can write every offer and say, hey, I want X amount of dollars before even signing anything, right? And I mean, that's your guess. I would just say just don't go overboard, because then you might just shoot yourself in the foot and not get anything at all. And so here's a possible refinance. So this is actually a scenario, right? So let's actually talk this scenario through and see, does this make sense, right? For this person to refinance. So first home, and I actually like this one because this is more of like finance more than anything. Maybe I should zoom in so you guys can see that. So first home purchase at 163,000 and they have a 6.3 interest rate. They've been in that home for almost 3 years. They're gonna come across some sort of money. It seems like they're gonna be coming about 80 grand. And he or she is thinking about either putting it all towards the home or, does that person just turn around, refinance for a smaller mortgage payment and or just leave the current mortgage payment as it or the current loan as it is. Right now they're paying 1,400 a month in mortgage. Not struggling, right? This person is not struggling in life, but they just want to kind of, I guess it looks like they want to lift some burden off their shoulders with a smaller mortgage payment. So, what would you, and I'm curious, let me know in the comments, what would you, and this is not financial advice. I should start there, right? This is, you do what you want with your own money at the end of the day. But what would you do in this scenario, right? If you have a mortgage payment of 163,000, your interest rate is 6.3. You've been in that house for about 3 years, so give or take, you have some equity, right? You have something to work with. You're gonna come across some sort of money, about 80 grand, so you could almost chop your entire mortgage payment in half, or at least not the entire mortgage payment, the loan in half, right? You could chop that in half, and I guess that's what he's saying in terms of refinancing it. What would you do? Just let me know. If you're on the replay, do hashtag replay and let me know in the comments. What would you do in this situation? Are you going to refinance? Are you just going to continue to truck through with, paying your 1,400 a month? Are you going to go ahead and give, or maybe you're just going to do a nice lump sum of a payment? Like, I'm curious because me personally, again, this is not financial advice. What I personally would do, I would just use that 80K and just slowly make payments. I would use that 80K as my cushion. That 80K can turn into easily 90K if you know exactly where to place it and what to do with it. So that's personally what I would do. Reason why I wouldn't, the possible refinance, I don't know if that makes complete sense because I can honestly go to Mortgage News Daily right now, right? If this individual has a 6.3, right? I don't know what type of loan it is, but here we can look at, a 30-year fix, 6.75, right? If it's a FHA, 6.15, right? 6.17 if it's a VA. So you're not really doing much. You won't change your payment. If anything, you're just giving the lender money to refinance you to shave off a few points. In fact, if you're ever considering refinancing, please write this down. I learned this a long time ago. If you're ever thinking about refinance, the not to say the only way is worth it, but you at least want to shave off at least 2 percentage points. So in this case, if this person wanted to really refinance, if rates were 4.3, then or 4, whatever, then I would say, okay, or 4.5, whatever the case is, then I would say yes, refinance and maybe drop additional funds on it to lower your payment even more. But other than that, I personally would not even really. I wouldn't change this because I don't think it's necessary. And so for everyone that has never seen a loan estimate before, we're gonna go ahead and take a look at it. And I want to show you this intentionally, right? Reddit is a great place to get a lot of questions answered, or at least see what other people are saying. I'll just point that out. If you have a question, you don't want to bring it here, go to Reddit, see if somebody already posed that question before, and see if you can get it answered. Or, of course, you can always reach out to whoever is in your network to make sure you can get your question answered. But all it did was make that X bigger. Interesting. Hopefully, you guys can see this really well. So this loan estimate is essentially what every single loan estimate is going to look like is like this. And your closing disclosure is going to look like this. I guess they're both for the same kind of thing. So whenever you're getting ready to close, you're going to receive these documents. All right. It's going to essentially share with you where every single dollar is going to. As you guys can see, this guy got a 6.49 and his loan amount is going to be 488, but his sales price is going to be 610,000, right? That's his monthly payment, right? And so on and so forth. So, I looked at this and I was like, okay, great. So this isn't really crazy, right? I mean, you're probably like, oh my gosh, why is this estimated cash to close so much? It's because he's putting down a hefty down payment. I can easily take a guess. He's putting down 20%, which he gets rid of that PMI, which is good on his part, right? But you don't have to. So I looked and I saw the percentage of loan points. I was like, wow, 7 grand. It's quite a lot. So I don't know exactly what happened here, right? My guess is he possibly could have paid down some. He could have paid down that rate, right? Bought down the rate a little bit. This, you can't really do anything about it, right? You just got to deal with the punches of whatever it is that's coming there. Same goes really for here. I mean, yeah, it says you can shop for it, but I mean, you're just giving it to a title for them to do everything that they have to do with it. You're not necessarily doing any one of these things, right? Somebody's in place doing these things. Taxes, can't do anything about it, right? Prepaids, you can't do anything about it, right? So the only real thing that you have control over is what goes on here. Is what essentially I'm sharing with you. Everything else, just hey, deal with it. Kind of that's just what it is. However, I know I mentioned, and damn, you can't even see this, which really sucks. So the origination fee came out to $7,403, and I was like, "What in the heck? What did this person do?" That's why I assumed, right? This is all assumption that individual most likely is paying down their rate or buying down their rate until I came across this here, which I don't know if you can see it. You can't. It says lender credits, which is 7,611. So whoever wrote this loan up for him, I want to know what in the heck happened here, because you're telling me whatever that 7,000 up here, this is just beautiful. This is beautiful, right? These are sort of the ideal situations you kind of want to be in. That lender looked out for him is essentially what I am stating. I'll share with you another one. Oh, or did I get rid of it? I think I did get rid of it. I can find another loan estimate for you. That'd be no biggie. Let's go ahead and do that real quick, because there are loan estimates all over this, and I've seen some horrible ones, and I'll be like, "Whoa, God bless that person's soul." Yeah, this one happened 8 months ago. So let's go ahead and take a look at to see what were they getting 8 months ago. Hopefully, you can see this much better. So they got a 6.375. Okay. You can see that cash to close a lot different too. Unfortunately, we can't see what the sales price is, but again, when you start to see six figures, you got to immediately take a guess that they're putting down 20%. And let's go ahead and take out this loan origination fee, right? So, man, why is everybody getting credits? What are these lenders? I mean, hey, I don't know. Well, it's pretty good for everyone. But as you can see here, this loan origination is 4,695 with an additional charge for the origination of 995, and that came out to 5,690. And so again, you can't really control anything else. I mean, you can try to fight it, but you're gonna have to just deal with the punches here again. But you see, lender credits is 5,720. So this is what the loan estimate's really going to look like. I want to find one that doesn't necessarily have lender credits on it, because this happened 1 day ago. Oh, that's pretty neat. Okay. This one doesn't have lender credits. So now you'll be able to really take a look at to see what's happening here. And this person is, see, it's not 100 grand estimated cash to close. All right, which means they probably are not putting 20%, maybe closer to 10. Right, and you can see their estimated closing cost is 31,000, which It is what it is. So you can see here, oh, this is a pretty neat one, right? So this person has about $1,000, almost close to $1,075 for just their lender application and underwriting fee. But you can see here, no lender credits. I mean, well, maybe you can see it. No lender credits. But this is what I was saying. I shouldn't say this is like normal, perfect kind of thing, or it's more of they have up. Okay, so yeah, they did less than 20%. That upfront mortgage insurance premium just gave it away. But every origination, just check that out. Honestly, check out what the origination is and see if that's anything. If you're not buying down your rate, then you shouldn't have a large, you know, or origination fees. If you are buying down your rate, then yes, that number is going to be elevated a little bit more. But if you guys don't have any other questions, I do this every Wednesday, 7 p.m. Catch me here on the dot. I'm in my drop top, cruising the streets. And this is where we're going to go ahead and discuss what's going on in real estate, just to give you that up to date information so you know exactly how to navigate that market that you're in. Again, if you need any sort of assistance and you need help with purchasing in the area that you are looking to purchase in, or you need a real estate agent, whatever it is that you possibly may need, if you just simply go to my description in the below, if you go to the description below, click the link, what you'll find is this link that says agent referral. You just come here, it's going to find you right over to this website. You just press let's chat, fill out this entire form. That way I can get in touch with you and kind of get a better sense of what's going on in your scenario. Better yet, how can I help? Once I get that information, I'll connect you to a real estate agent in your local area. And that way we can make sure that you get well taken care of and actually, get somebody that's going to literally be your advisor, not someone that's just going to be there trying to get another ticket, right? When I say another ticket, I mean, just another check, essentially. But with all that being said, I do want to let you know that there are some changes happening to FHA. So you want to be cautious and worrisome of that. But we're not going to go into any of that today. I may save it for another day because I don't think it's really going to impact anybody here that's really looking to purchase. But if you know somebody that is trying to purchase a home and they are looking at FHA, you might want to give them a tap on the shoulder and say, hey, there are some changes going on in FHA. So you either better move faster or you better just go read what's going on and see if it does apply to you. But with all that being said, if there are no last questions, I hope y'all all have a blessed week. Hopefully everybody stays safe and see you all next Wednesday.